I'm Nick Campo. This is
Big Boss Ben.
Big Boss Ben, and we are the Lone Guys Podcast. We're coming to you live from the Campo Media Group studios. We are an NBI Financial Group brought to you. NBI Financial Group, the premier mortgage broker.
You better believe it.
Woo! Before we get started, if you haven't done it yet, go ahead and bang that red subscribe button. Turn on your notifications. That way you know every single time that we post a video. Go and follow us on all of our social media, NBI Financial Group on everything, and it's literally every social media channel. Ben, where can they find you?
They can find me on Facebook, LinkedIn, Instagram, and TikTok, all under Big Boss Ben or Ben Singleton.
And I'm on all the channels, LinkedIn, TikTok, Instagram, all of it. I'm Mortgage Man Nick. Ben, what do you got for us today?
Oh, you're not the mortgage mobster anymore?
No, I didn't want to intimidate people.
Yeah.
Mortgage Man Nick sounds better.
Easy to do nowadays.
Oh, yeah. What's up, though? What do we got?
So wanted to start off with some new comments made by the Fed. In particular, we're talking about John Williams, who is the president of the New York Fed. So his quote here is modest, that he's expecting modest growth this year. Not the recession that many have forecasted.
Well, isn't there modest growth in a recession?
That's exactly my point. It's wild. Like in this, he predicts that there's going to be a 4 to 5% increase in the unemployment rates over the next year. He's also saying that the bank situation is now stabilized, so he's expecting that they're going to hike rates even more by another 25 basis points.
So let me ask you a question.
Yeah.
He just described a recession and then said it wasn't a recession.
Essentially, yes. I mean, and the fact that he's saying, too, that he's going to hike it another 25 basis points, a lot of the Fed, thankfully, have kind of finally caught on, like, hey, this is not good. We do not need to be raising it like we have. Inflation has already caught up enough, considering shelter inflation right now. I mean, those numbers are still behind.
Right.
They're getting better and better each month when the CPI numbers come out.
I heard another quarter basis point this coming meeting.
That's what he's saying, too.
And then possibly next meeting. But by the next meeting, we'll have the updated CPI numbers showing housing has caught up.
It's wild.
You know how I like to stay politically correct?
Yes. How?
So I'm going to be very politically correct here, and this dude sounds dumb.
I mean, he is.
Is that politically correct?
Not. I mean, who cares? I mean,
man alive, how are you?
It makes no sense. It's inflation numbers, and 44% of the overall CPI index comes from shelter inflation because real estate, rent prices, car loans, like that is the major expense for the vast majority of Americans, 99% of Americans. And the fact that all of that's delayed by 1 to 5 years, depending on like a car loan, whatever the financing may be, you have to take that into account. And with the inflation numbers improving like they have been, like it's only going to get better because of that.
Right.
Like you can't keep raising it when we've ran into a potentially major issue.
Well, they can keep raising it, but they shouldn't.
Right.
If they know what they're doing.
Right.
Or maybe they do know what they're doing. Here's
Right.
where the conspiracy comes out of me. Are they doing this on purpose? Because if you continue to hike rates, what's going to happen is the economy is going to start shrinking. Not going backwards, but it's going to start slowing. Shrinking was the wrong word. The economy will start slowing. When the economy starts slowing, you're going to see layoffs. You're going to see people not hiring.
Right.
We went through this on one of our episodes recently, and we had a conversation. There's more jobs, but less hours being worked, which means there's more part-time jobs and less hours. That's an inflation sign. Manufacturing, or not inflation, I'm sorry, that's a recession sign. Manufacturing numbers, New York manufacturing numbers, if you look at them, they've been in recession sign for a long time.
Right.
Amazon's laying people off. There's been bank runs, dude.
Right.
Multiple bank runs. And then you have the Fed, Janet Yellen. Oh, Janet Yellen, my girl. You know, she's kind of hot. I'm just kidding. If you've ever seen her, everybody knows that's a joke. But Janet Yellen, the old saying is if you don't look good, you better be smart. She's not very smart.
Focus on the debt ceiling. Focus on the debt ceiling.
And listen, this is that part's pure comedy. But yeah, she needs to focus on the debt ceiling. She's come out and said she's going to increase debt $50 trillion. But my favorite part is when they asked if the Fed would bail out other banks if there was a bank run, they said that basically, long story short, she's going to pick and choose.
Right. Oh, and you know what happened? I mean, talk about conspiracy theories. Quarter 1, guess who made a profit?
Who?
Bank of America, even after dropping their mortgage program like they did, like reducing their mortgage program like they did, Wells Fargo, JP Morgan Chase, all recorded an increase of profits from the previous quarter.
And they are now buying those small banks that are having the runs that miss
Bingo.
Yellen, the beauty that she is.
So who's
is
really
not
profiting from this?
Yeah, it's
the big banks. Like it's
because they're picking and choosing their favorites, right?
Right.
So here's the problem, and everybody wants to talk about this. The problem we have is we have a corrupt government, and it's corrupted not in like, hey, I'm going to try and take advantage of people. It's corrupted in, I'm going to try to benefit myself the most. Miss Janet Yellen, again, she's beautiful. I was kidding about what I was saying. She essentially says we're going to pick and choose.
right.
Well, guess who has the most influence when it comes to politicians? And I know she's not a politician, but she's appointed by this administration. Guess who has the most influence? Corporations. Big
Right.
corporations, because they hire lobbyists. These lobbyists go up to Washington. They make major donations to PACs and campaigns to get people elected. And then they do what? They ask for favors. And the favor that these big banks have asked for in this situation is if we get in trouble, help us. 2008, they helped the big banks, but they allowed certain ones to fail, right? And now Miss Yellen is saying, we will help the bank. We're going to pick and choose, but we're going to pick and choose the ones that'll cause the quote unquote least amount of economic difficulty.
Yeah.
So you're allowing somebody who's appointed by a government official to say, hey, Ben, your money is in this local bank down here, South State Bank, we'll call it, because we're in the South and God bless America. South State Bank. South State Bank gets a run on it. Janet Yellen's not helping you. They aren't big enough to have any influence in Washington. And quote unquote, it won't cause economic impact. But hey, Ben, your money's not safe. You won't be able to support your family. You won't be able to give payroll
Right.
to your employees. And I will say this, as a business owner myself, be smart enough to recognize this. All our accounts are with the big banks. JP Morgan Chase, Bank of America, Wells Fargo. That's who we do business with, because I never want to be in the situation like a Silicon Valley bank where there's a bank run and we run our payroll through them and we're above the FDIC limit, right? And a lot of times with payroll, especially as you get bigger as a company, you're above that limit. And then my money and my deposits aren't protected, and then I can't pay my employees.
You're right. I mean, that's what you have to do as a business. And I mean, and look, that's what a lot of the bigger banks are doing.
But that
too,
sucks that we have to do that.
because they are doing that and they're increasing hiring. They're providing that value to their employees. But I can guarantee you right now, we're going to start getting a lot of comments about, oh, this capitalism's failing because these businesses.
It's not capitalism.
It's not capitalism. Exactly. It's what is true capitalism is limited to no interference from the government. We are not getting that. I mean, the government needs to stand back and not do anything.
The problem is
With these rates and with everything that's been done, that's been artificially manipulated by it, that is not creating an equal playing field that allows capitalism to thrive. Like, so you cannot blame this on capitalism.
no, what you can blame it on is corporatism.
Correct.
It's corporatism.
Correct.
Corporations control the government officials who don't have term limits, who then make laws and rules based on the favors that they have to give
Right.
so that they can keep having somebody pay them to fund their campaign. You want to know what the crazy part about it is? I can go into any community and say that statement right there, and they would agree with me.
Right. And at the end of the day, it's not on the businesses. It's on every single person who is out there voting for someone who is going to go in there and support basically big government, overuse of government. Because if we want to make any changes, that needs to stop.
It has to stop, and then term limits have to be put into place. too.
Right.
Because if you put in the term limits, you get people who actually want to help.
Right.
Do you think? I'm going to use Miss Nancy Pelosi, another good-looking beauty there. I'm going to use her as an example. She made millions of dollars as a Congress or a House of Representatives, Speaker of the House, right? So she made millions of dollars. How is that? Oh, her husband made trades. She outperformed mutual funds, Roth IRAs, the smartest people on Wall Street and in the stock community. She outperformed them. And this isn't just her. It goes on she's a Democrat. I'm not attacking. It's both sides. It's Republicans too. We can look at Mitch McConnell, another good-looking dude. Why are only ugly people representing the government? I think you have to be ugly. That's like a thing for.
Right.
But anyways, long story short, they all made money. How do they outperform the smartest people in the world when it comes to stocks, bonds? They're outperforming the smartest people in the world who do that every single day. How do they do that? Oh, insider information. So that's another thing. Let's do term limits. And hey, if you're in Congress, House of Representatives, a government official, you don't get to trade. Am I wrong on that?
You shouldn't be, but But even if you limit it, they're going to do it anyways through family members. Through it's not
Family
going to
members
stop
can't.
it.
Immediate family members can't either. Let's say that. Let's make an actual rule that they can. If you want to go into the government and you want to make decisions on us and base your decisions financially and so on and so forth, because they affect a lot of the financials. Now, do they control it? No, man. Don't use that as an excuse. But at the end of the day, like, there is an influence on it. I feel bad for the people at the small banks that Janet Yellen won't save because it's not enough of an economic impact. Okay, well, what if they have a young family? You don't think that's an economic impact?
That's yes.
Like, come on. We should not be picking and choosing favorites. We should not have federal government officials. We should not have federally appointed officials. We should not have these people who say, I'm picking and choosing based on what's going to cause the least economic impact. The problem is, in 2008, they picked winners. They picked winners. And now you're seeing the effects of 2008 now.
Right.
Now, the housing market's not the same, so we're not going to have this huge bubble that blows up. It's completely different. Vacancy rates are at all-time lows.
Right.
So, which means we're not going to have this big bust and this big.
Yeah.
It's not 2008, right? So it's just they pick and chose winners, and when they did that, they did more harm than they did good. And anything the government touches turns to shit. Like, seriously, anything the government touches turns to shit. How did we become of America? No taxation without representation. And here's the deal. I believe that it should be no taxation with or without representation. Now, if you want to come to me and ask me, should I give some money to the roads, to police, to the EMTs, to the fire departments, I would be okay with that. But I want to know where every dollar is going.
Well, we've talked about it's community based.
But I don't want to fund any more of these foreign wars either.
Right.
Like, new reports coming out. We have American troops on the ground in Ukraine, quote unquote, special forces that are just in the embassy. Bullshit. Why is my money going to that? Why is my money going overseas? I don't know a single Ukrainian. I'm sure they're great people, but I don't know them.
It's the trillions of dollars being printed. We wonder where we're at in inflation with the interest rates going up, with everything that's been driven from that. Is printing trillions of dollars, more than the average American has in their savings account, like combined.
Yeah, all of Americans combined have
an
less
excess
money
saving has less money than what we printed just to send to
and then
Ukraine.
we turned the dollar into a weapon.
Right, and now we're on the verge of losing the international currency.
It's going to be a slow slide, but it's going to be ugly.
It is, but it's all because of over manipulation by the government, by the federal government. If you want to make changes, if you want to have things up, do it at the community level. Every place is different.
We should make a rule for
Every
government
community,
officials.
every community, every city, every state has different needs, different people there. Let them make their own decisions.
I have a rule, a new rule. If you want to get elected into politics, we have to look at your family.
Yeah.
Right? So if your son's a crackhead, you can't be an elected government official. If your kids have gotten arrested, you can't be an elected government official. Because I truly believe, now you don't control everything your kids do, but if you take care of things at home, typically your kids don't become crackheads, felons, things of that nature. Now there are outside influences that can get involved, especially for, and what I really am concerned about is the single mom.
Right.
There's not a dad in the household. You're raising your kids on your own. You're having to work 16-hour days, and then the streets get them. That's the neighborhoods I kind of grew up in. I've seen that happen. That's not necessarily on the parent.
It is.
That's where there needs to be help from a strong community, and that's where we need to fix our community.
Right.
But
I agree, because you need strong leadership.
Well,
because if
right.
you also, and I disagree with what you're saying to an extent about looking at that, because it also depends on how they get through it and how they push, because you can have someone that comes from bad circumstances and comes out better because of it.
Right. Yes, 100%. But what I'm saying,
and I think that
I'm looking at it from a
like,
leadership
an
standpoint.
experience. Yeah.
Like me as a leader, if my son was smoking crack, there'd be a problem, right? If my son was robbing stores, stealing cars, doing that type of thing, there would be a problem.
Right.
And we would have to adjust that. There would be an adjustment there.
Right.
But what I was really getting at, that was said more as like an offhand joke because I was trying to make Donovan laugh. But here's the other piece. What I'm getting at is a strong leader knows how to financially budget for their household.
Yeah.
There's no way our politicians know how to budget.
No, they don't. They
And
know how
that's-
to print money.
They print money and it causes more inflation, and inflation goes higher and higher and higher.
And they increase
higher.
the debt ceiling.
Massive problem.
I mean, it's problems all around.
Right.
Yeah, it's a problem all around. And I mean, going back to how this even started too, that overall quote about they don't even understand the difference between a recession and a depression. Like, right? Like, let me ask you, what is a basic difference between a recession and a depression?
A recession is a slowing of the economy. A depression is a shrinking of the economy.
Exactly. Perfect example. What do people do when things slow down, when they might not have as much money, when overall pay wages are declining? What do? They get second jobs.
Yes.
They look for other ways to do it. So unemployment rates historically have actually decreased in times of recession because people are still out there finding ways to do it. And right now, I mean, you're seeing an increase in travel jobs and increase of hospitality. If you look at the actual sectors that are declining in unemployment rates, it's those that offer basically flexible hours and perfect opportunities for second jobs.
You want to know what cracks me up?
We are in a recession. Like
we've been in a recession.
This is historic. Like this is what defines a recession. I mean, you also look at the GDP growth rate. You just talked earlier about like manufacturing employment rates. Like that is one of the first things that slides when we enter a recession. Over the last 6-8 months, it's been on the downcrease. It's been declining.
Right.
And the reason for that, I mean, there's just not as much being generated, which means the GDP, the gross domestic product, declines.
You know what makes it harder to pay?
What?
The interest on that debt. So if your economy is not producing a GDP enough to generate, your gross domestic product has to grow at a certain rate in order for you to be able to finance more and more debt. They're talking about $50 trillion,
right,
and our GDP is sliding in the wrong direction.
That's
what I call a perfect storm. Have you ever seen that movie, A Perfect Storm, and all the hurricanes come together and that poor little fishing boat's caught out in the middle of nowhere?
Yeah.
The American people are a little fishing boat in this instance. We're caught out in the middle of nowhere just trying to do our jobs, trying to provide for our families, and the government's coming in and they're saying, we're going to create a perfect storm. We're going to drive the debt ceiling up to $50 trillion next year. Next year. Like, we're not talking 2 years. Next year. And then on top of that, we're in a recession, but we're not going to call it a recession. We're going to lie to the American people, and we're going to see a shrinking of the economy, a slowing of the economy, meaning it's not growing as fast, not an actual shrinking, but it's not growing as fast. Still growing slightly, but not enough to keep up with the rising debt ceiling. And we are creating a perfect storm to hurt the most working class families ever. And hey, folks, I don't want you to feel bad because you voted for it.
Right. That 4 to 5% decrease in or increase, of unemployment that John Williams is speaking of, that's a depression.
Yes.
Like that is signs of a depression. You have, I mean, the GDP was negative in Q1 and Q2 of 2022. It grew in Q3 and then declined again in Q4. So 3 out of the last 4 were either negative or a slowing rate. Like that's a recession.
That's a recession. And if they keep going, they will put us into a depression.
Exactly. Like that's the thing. They don't understand the difference.
But and let's talk about this too. A depression doesn't mean 1930 stock market bubble, boom, blows up. We have 10 cities and Hoover being the worst president in American history, right? Hoovervilles, you remember those?
Oh, yeah.
Donovan asked me earlier, are you a history major? No, I just love American history. But I also believe in order to have success, you have to look at history. And I am watching history come close to repeating itself. Now, there's been some regulations and stuff, but you're going to blow up the economy because you aren't smart enough to look and see the indicators showing that the economy has slowed, that we're in a recession. So what are you going to do? You're going to create a depression because you're not smart enough. I have a serious question. I know we have to move on to the next topic, but I have a serious question for you.
Yeah.
And I want to get your opinion too, Donovan. How do people who have like Harvard degrees, Yale degrees, things of that nature, they are not as smart as some of the people that we follow and that we take advice from and so on and so forth within the financial industry. How do they get these positions on the Fed when they literally don't know what they're doing? That's my big question, Ben, first.
Because they know theoretical economics. You look at it, it's the same thing as politicians too. Like, how are they so disenfranchised? Because they're not everyday people.
Right.
Like, they look at things from a theoretical, but they're not living the day-to-day life that all of us are. Like, and that's what, and I mean, I've said this on this podcast before, like, what makes a leader? Like, what should a leader be? It's not someone who knows everything. It's someone who knows or is able to find the people who do know it and put them in the right positions.
Right.
Is to gather that information from the right people. So what the Fed should be doing is not sitting here and just looking at these numbers and everything from a statistic and theoretical standpoint. They need to be actually out there speaking with the everyday people, finding out what are actually driving these numbers. Not what is the number. What are driving these numbers? What is the direction that this economy is actually going? What are the differences that the people in this country will make?
Right.
Because at the end of the day, like, what is the country?
So
the country's the
how do they get
people.
these jobs?
Like the country,
They're unqualified.
I mean, they're qualified from a degree standpoint. But what does that degree say? That they've read enough books.
I just have a
That
problem.
doesn't mean that they actually understand the ins and outs of all of these industries that they're making regulations about.
When you say they're being controlled, though,
Turn my volume up.
What was that, Donovan?
so when you say they were being controlled, though, can you hear me?
No, a little bit more. There you go.
You guys hear me now?
Yeah.
Yeah, there we go.
That the Fed's being controlled?
Well, like the people who get these jobs, they're like easily controlled because they're just the face of it. You know, they don't
Right.
actually make the decision. It's like the president.
They are.
We think that he does everything, but in reality,
It's a buddy system too. Like, and this is what I think it is. It's a good old boy system. Oh, you went to Yale, you went to Harvard, you were in the secret society, you were in this, you were in that. This shit might get me shot, by the way. But it's come on, let me hold your hand. Like, I have a problem with a lot of the people in these positions because they've never built anything.
Yeah.
They've never built a business. Like, they don't understand. Like, when you build something and you're building it successfully, there's a lot of hard work. There's a lot of long hours. Shoot, you're building on their social media.
Yeah.
The very beginning, especially, bumpy. If they have never built anything, how can we expect them to make rules and regulations from a standpoint of understanding? If they've never grew up in a rough neighborhood, how can you make the rules and regulations to fix a rough neighborhood and to make
Right.
it better and to give people? You don't understand it, and that comes with. I've always said that the best leaders are the ones who know they don't know everything.
Yes.
Right.
If you know you don't know everything and you are willing to listen, adapt, and change, you're going to be a successful leader. And then you're going to find the people who know
That's
about specific things and bring them in and put them into positions so that they can help. So the first thing, if I'm trying to create a better environment in a city, and I'm going to use Amsterdam, New York, where I grew up, where job opportunity and there's a lot of unemployment and there's a lot of welfare. The first thing I'm going to do is I'm going to find somebody from my city who's become very successful and ask them to come back, take a look, and say, what would you do to fix this? How did you get out of this environment? That's the first thing I would do. If I'm the Fed, like with the Fed, if I'm looking at budgets and things of that nature, and how do I run a country successfully from a monetary standpoint, I'm going to bring somebody in who built a business around money and possibly trading of money and say, hey, can you take a look at this and tell us what you think? Okay, can you help us here? Let's rebuild. Like, you have to bring people in who know what they're doing. Let's use our business as an example. Donovan knows more social media than I do. How often do I get involved in the social media aspect of this business outside of just giving ideas?
not much, really.
Do you ever hear from me outside of me forwarding you the reports I get?
No, not really.
Because I expect him to be the expert. Operations side, I have to oversee things, but from an operations standpoint, how many times do I come to you and say, hey, here's what the process needs to be?
I mean, not very often. It's
Not
more
very often. I'll put my input in if I see something. We just hired somebody who's essentially a COO, a chief operating officer, in Sarah. I shouldn't say just hired. She's been here, and she's literally building processes. How many times do you think I've called her and said we have to do things this way? Never. We
No,
just brought another person in who is going to build acquisition out, so we're acquiring more partnerships and so on and so forth. How many times do you think I'm going to say, hey man, we need to do it a different way? You're not.
Not very often. I mean,
Ever. Like,
right. But I mean, but we're still a team. So especially like sales and operations needs to run hand in hand.
it does. So
From
you
that
work
standpoint.
together.
So you work together. You're aware of what each other is doing. You may have input of, hey, this would help us from the sales side,
right.
but it's not running what they're doing
Right.
because they are.
But that's the thing. That's the thing. It's like the government has never built anything.
Right.
They're
Well,
they-
they built the DMV.
that's efficient. But you know, they're in these positions now where they have to make the decision on industries that they've never worked in, they don't understand, and the decisions they're making are coming from a place of we don't want any more competition because we're the big dog on the block and we want to make it harder for the people to come up.
Right.
So now you have the government officials taking donations and getting put into place, and their campaigns being run by. Look, if you look at cars, the Fords, the GMC, all of those, right? And then you look at our industry. Then you look at the banking industry. Like the big boys control the industry, and it's very hard to become a big boy. And if you get too big, you know what they do? They freaking buy you.
Yeah.
So you need somebody who has a set on them, who's not afraid to sit here and say, "I'm going to go up against them. I'm going to go up against them. I'm going to become very public about it." But that's hard to do because.
Yeah, what about the fact that they hold positions for such a long time? Because
That's
some
a
people
problem.
don't, like, I think the president's what, a certain amount of years, but everyone else can kind of like keep their position for almost as long as they want.
That's the problem. We need term limits. I just signed a petition
Right.
with our local politicians here who are pushing Washington and trying to come up with a way to set term limits in both the House of Representatives and Congress because they have the most control. But
On both sides, on everyone.
Yeah, on everyone.
And more than two parties would be like,
Yeah, dude, we got to get away from this Republican Democrat thing, right? Because then what happens is the extremes, you got the extreme right and the extreme left.
Yeah.
Like, and the people who are falling here, like, we want to show up to work, we want to work hard, we want to do this, we want to see the best for other people.
Right.
That's the majority of people, but we're on the extremes.
look, right. Look at this last like presidential election. What would every single person who was, I say every single person, the vast majority of every person that voted were voting against someone, not for someone. That's a problem.
Yes, I agree. I think most people also saw both these presidents and thought of their grandfather, right? Because if you think about it, it kind of reminds me of the Beverly Hillbillies, where the old grandpa would sit on the porch and you're yelling at the guy who's stepping on your front lawn. That's where we are as a country too. Like, let's do this. If we really want to fix something, instead of the people who are going to die in the next 3 to 5 years running the country, maybe they might live longer because they have money and stuff, so they might live 10 years. But maybe we should go ahead and, if you're over 65, you don't get to be president, right? I mean, we have to do something.
Yeah, I agree. You can kind of cap the age limit with presidents.
I mean, they limit you have to be 35.
Which I agree with because we're pretty stupid in
Yeah.
our 20s, and then you have a few years of trying to learn. I can tell you I'm smarter at 34 than I was at 24.
Yeah, for sure.
Not way smarter because I'm kind of dumb, but
And then you go back to what Strom Thurmond was like 102 in office.
yeah.
I mean, yeah. So, I mean, yeah, but how are we going to make these changes though? Like you talked about signing that petition. I did the same thing. It's the biggest way to do it is to vote. Like, and I know it's hard. Like, and I'm guilty of this myself. Is when you go to an election saying, actually, I want to vote third party, but I know they don't have a chance. I don't want to waste my vote.
Well, and some of them.
How is it ever going to change? Even if you do it, if you raise the percentage that much more, the next election, that much more people are going to want to do that as well. So you have to actually stick to your guns and say, maybe it won't win this election, but just those increase of percentage of votes that person gets, that a third party candidate gets, may make a difference in the next election or 2 elections from now or 3. And you have to do something to get out of this cycle.
Because you have to get out of the Republican versus Democrat cycle because
You
not.
do.
And you have to get out of that cycle to see any type of true change.
Right.
But the problem you'll have is if the candidate is considered like a independent, a lot of times they'll run under the Democrat ticket or the Republican ticket. So if only one of the Republicans or Democrat side split off, it's going to ensure the other side wins. Right. So you really need a candidates that are very centric on both sides to split off and start new parties. So now both sides have split, and now you have 4 parties instead of 2.
Right. I mean, we talk about.
I don't want to talk about politics anymore.
Yeah, that's a good point. We try to limit that anyways, but not through this episode.
Right.
But okay, so
Ben.
Let's switch to a different topic. But first, I want to remind everyone to hit that subscribe button, click the notification bell, and like this video. Make sure that to do that so you are notified every time we release a new video, which is once a week, and we're going to do it every week on live Thursday at 12 o'clock going forward.
12 to 1.
12 to 1, yep, live. So make sure to join us live. and leave a comment and leave a good one. Don't just say, "Oh, I'll watch this video." And if you do that, you will be entered into a contest. Make sure you also leave your Instagram handle.
Can I tell them what the contest is?
Go for it.
Donovan, I'm a man of the people, and we're the Lone Kites podcast, and we love the working class American, the person who's trying to buy a primary residence, who's trying to build a house, who's trying to do what they need to do in order to provide for their families. So you want to know what us, NBI Financial Group, the premier mortgage broker, and the Lone Guys podcast are going to do? We're going to give away $1,000. You can either take it in cash or Bitcoin. All you have to do is be subscribed to our YouTube channel, so bang the red subscribe button and turn on the notifications. And then you have to comment on our videos. This means watch the whole video and provide a comment. If you just say, "Hey, this is a great video," that doesn't enter you. But if you say, "Hey, I thought this about Janet Yellen. I really think she's hot, Nick. How do you think she's ugly?" Then leave your Instagram handle on that. And then guess what? You're entered in. And the more comments, the more entries. And then we are going to randomly draw the winner of that $1,000 contest on September 1st. So just in time for you to take that Bitcoin or take that cash and bet on football. It'll be perfect.
I have a question.
What?
Can they be paid in the won?
What do you think we are? We want. Well, if the American dollar keeps going like this, I guess we have to switch to Chinese currency.
Right. Yep. I mean, we got to make sure that they're going to get the best exchange rate sooner than later.
Right.
Speaking of that, too, did you see the thing in New York about the Chinese police station?
Oh my God! Yeah.
And apparently there was one in
There's
LA
a secret
too.
Chinese police station in LA and New York, and they were spying on Chinese Americans who came here from China and arresting them if they broke Chinese laws in America. It's crazy.
What, in New York and in LA?
Right, and there's more.
I'm sure there are.
The Chinese Communist Party, the CCP, which is the Chinese government, not the actual people in China, but the government, would like nothing more than to destroy America.
They have the tools to do that.
We'll see. They're pretty old. Their population within the next year is going to die off. Economically, we'll see. I mean, they're still
in
very
terms of
undeveloped
currency,
part.
yeah.
The currency ain't coming. Listen, let's not get too far into this. We talked about that in the last episode. So. What's your next subject?
We did. All right, kind of getting more into the mortgage side of things. So earlier this month, the 2022 volume numbers came out in terms of top mortgage lenders in the country. Who do you think was number one?
United Wholesale Mortgage.
Rocket edged them out.
What?
Yep.
How did that happen?
Rocket ended up edging them out.
How did that happen?
127.58, but less than $1 billion in volume.
By less than $1 billion. They fudged the numbers.
I mean,
They paid somebody.
but you also got to think that Rocket that includes retail and wholesale. UWM.
Oh wait, hold on.
No, this is overall.
Overall, and UWM, who's not
Is 100% wholesale, was less than $1 billion behind Rocket in terms of retail and. Yeah.
And for people who don't understand, like $1 billion sounds like a big number, but when you have companies doing 16 billion a month in volume, less than $1 billion. And here's the deal: Rocket is not number one. UWM is number one. If you have to use your retail and combine it with your wholesale in order to be number one, and the other one is just wholesale, just broker channel, and they're behind by less than $1 billion, that's a sad state of things over at Quicken or Rocket, whatever we want to call them these days. And I'm a fan of Rocket.
Oh, I mean, yeah.
I'm a huge fan of UWM. I'm a fan of Rocket. I like the competition. I'm ready for the lawsuit to get settled to see if we can work with both places and make earn.
I would love to be able to work with both places, but yeah.
That's big.
But yeah, no, that's huge. And I mean, the fact that the number two by a small margin is 100% wholesale lender
That's huge.
that's a massive indicator with the direction that this industry is going.
Well, if you want to spend less money at closing costs, if you want to have a lower interest rate, which means your monthly payment is going to be less, if you want to qualify, have a better chance of qualification, whether it's down payment assistance programs, 2% match on down percent one. If you want to do that stuff, you work with a wholesale broker or a mortgage broker,
Or more options for your clients.
right. And if you're in the Carolinas, you need to work with MBI Financial Group because we are your premier mortgage broker in this area. I know, I'm being serious. There is nobody better than us.
Right.
And a lot of people don't like me getting on this podcast. A lot of friends of ours who might have broker shops, who former friends of ours who might have broker shops, they do not like the fact that we have this podcast. They do not like the fact that our social media is blowing up. They do not like and they won't tell us, but I know they don't. And you know who I'm talking to. I'm talking directly to somebody. But they do not like the fact that we have this, and they don't like the fact that I'm pounding my chest saying we're better than you, because we are. And if you want to be better than us, step your game up. You'll just drive us to be better, though. So, rising tide lifts all boats.
Competition breeds winners.
Did you just make that up?
I did.
Nice. Competition
That was
breeds
good, though.
winners.
That
That
was
was
good.
good. I love that, man. Ben's really coming out of his shell.
I did.
I'm a great role model.
So then, following those two, you get into the Wells Fargo, followed by Chase, and then Bank of America. Even though Bank of America now got pretty much depleted their mortgage and sector going forward, but
But they were losing money. Just because they're doing volume doesn't mean they're making money.
correct, they were doing it. I mean, we say that they were losing money. Yes, they were losing money on the mortgage side of it, but their company was still driving a profit, and that's what we've been saying is that they don't do it for the mortgage. They don't do it to give you a good experience buying a home. They do it to try to keep you happy so that they can keep their money in their bank.
Right.
Following that, you have U.S. Bank, Fairway, First Republic,
I hate Fairway.
and Cross Country.
I hate cross country too.
Although
I was just laughing. I just don't like Fairway and cross country.
and Loan Depot Retail.
You know what Fairway reminds me of? You know what they would remind me of, Ben?
What?
Golfing.
Yeah.
Because in golf, when you tee off, you want to hit the fairway.
Right.
So it's almost like the owner of the company is like, man, I don't really want to do this. I would rather
Right,
be golfing,
right.
so we're going to be Fairway Mortgage.
Yeah.
Not necessarily our course, but that's a different topic.
Do you know why I don't like cross country?
Why?
Sounds like a track meet.
I mean, it is.
Cross country.
Yeah.
Like, come on. Come up with a better name. Like NBI, National Brokers Institute.
Yeah, and then you have New Res as well, but they weren't technically in there because they technically merged in 2022.
Was that 2022?
Officially, yes.
What happened to Better.com?
Their CEO's being investigated. They fudged the numbers.
Donovan, that was great.
That was great.
That was great.
Oh man, that is awesome. I love the fact to know that Donovan's learning something.
Their 1 day pre-qualifications
Yeah, one day
are still too far behind.
Yeah. Oh man, what else, Ben? Come on, let's speed this thing up. Let's give the people some energy. Did you drink last night?
No.
Oh man.
Did you?
Fuck yeah.
Bourbon?
Not bourbon, no.
What?
Couple beers, had a couple IPAs. So I found out I was cancer free yesterday. I did, Donovan.
Oh gosh.
So this is why podcasts are great because you can get a little bit personal. We're going to talk back about mortgage, Ben, because I want to get back on topic. But I had this whole tooth thing that was going on, so I had the thing put in. Well, I had these little bumps on the lower part of my mouth. Nothing crazy. It's not like gross or anything like that. I'm like, I'm dying. I got cancer. And so I went to the dentist. They're like, oh, no, that's totally normal. Like 30% of the adult population has those. It's just your teeth have extra bone.
Yeah.
Yeah. So I thought I was dying. Did I not, Ben?
You did.
I literally thought I was dying for the last.
I know. I believe it 100%.
Yeah. And I just kept thinking about my son and my daughter growing up without a dad. And I was like, man, I hope Liz can handle the kids. And I was moody at home. You know how most people, if they think they're dying, they go skydiving,
Yes.
Me, I got miserable. I was pissed. I was yelling. It was bad. I was like, I don't want to die. I don't want to die. I want to live forever. At least till 100. With modern day medicine, I should get to 120. Moses was what, 200 when he died? What do you got, man? Let's get back into the mortgage business.
So kind of leading off of that list there, talking about some new products and the trends that a lot of places are going. You mentioned earlier UWM announced their new 1% down. They match 2%, so it's a 3% down program, but they give you a grant for 2% of that on conventional.
It's not technically a grant though. It is a grant. They're matching up to $4,000.
Yeah.
So it's for smaller loan amounts. It's going to be really effective.
It is. There's income restrictions on it too, aren't there?
There's some income restrictions, but they'll go up to $4,000. So 2% or $4,000.
Right.
The lesser, then they'll go up to 4,000, and then you bring in 1%.
Right.
And they're calling it a grant. It's not technically a grant. It's money that they're gifting. It's like a lender credit almost.
Right.
Because they're trying to make it so more people can get into conventional financing homes.
Yeah. I mean, it needs to help too because these like looking at the pricing and pricing clients
Oh my
up,
God,
these loan level pricing adjustments with this different.
it's terrible.
We have 800 credit score, 20% down. Like what? Like
It's bad.
like how is that not considered a much safer investment from a secondary
Explain
market?
that a little bit. Like you can't like I understand.
Right. and
Pretend a kindergarten teacher is watching it. It's okay.
We've gone over this before, but yeah, just to kind of reiterate and explain. So, what the FHFA did, which is the overall government, like a government entity that basically kind of controls the secondary market on a lot of things, is they changed how much of the interest rate costs. And what they're trying to do it, make it more favorable for first time home buyers, which those numbers are still decreasing, by the way, on that. But what they ended up doing is it costs more for a better interest rate now for a 800 credit score, 20% down. It's crazy. Like, I mean, there's a point where you put more down, you're going to get a worse interest rate.
It's wild. Like,
but the overall reasoning for this should be because of on the secondary market, when you look at bond investors, they consider it a safer bet, right? If you have more equity in the property, if you put 15% down, you're more likely to make your payments because you don't want to lose what you've already invested in the property. But they're manipulating it to try to increase first-time home buyers, which is great to do. I mean, I would love to have programs that benefit first-time home buyers.
but you shouldn't hurt.
But you shouldn't penalize these safe clients.
Yeah, no, you shouldn't.
People who have done the right things for years to put themselves in this position are getting penalized for it.
So let me ask you a question. We're talking about how there might interest rates might be go
Right.
up again. Like they might hike the overnight bank rate, and the Fed might
Right.
0.25%. Right? Do you think maybe this is them trying to slow down the housing market? Because if you have penalties for the safer borrowers who are probably, or the safer buyers who are probably already in primary residences,
Right.
maybe they don't, because of inventory issues and things of that nature. Maybe they're trying to slow them down to allow first-time home buyers a better opportunity.
But correct. And because it does give eventual. So it costs less for a better rate now for lower credit score, for like a under 600, like a under 700 credit score, for the 5% downs, for people, for things that are more first-time home buyer related.
Right.
That
Yeah,
you see
I
more
thought like the
percentage of first-time home
FHA
buyers.
wasn't that like not a better loan, but it was easier for people who maybe
Correct.
don't have the money for.
Right.
Because it has less adjustments on that for credit score, for things like that,
Yeah.
So your
which are
interest
more
rate's less.
favorably with like for that, and it's been the case.
Right. So the
Um,
interest rates are less, and which makes your monthly payment less.
Right.
So it's more affordable, so you can qualify for
Right.
more.
You have higher like mortgage insurance. There's things there so that still protects their investors,
Right.
but it does make it a lot more affordable and it's easier. There's something called AUS findings for those who aren't aware, where you
Automated
basically
underwriting system.
Right.
AUS stands for automated underwriting system.
it's an algorithm that takes everything into account and basically qualifies it. So it's not
Because computers are the future.
exactly it's artificial intelligence essentially that says if you can buy a home or not.
Right.
And it's for an FHA, for HUD has theirs set up so you're way more likely to get qualified at
Right.
a lower credit score. So it's that program, for example, and that's the direction, like personally, I think that we should be going
More FHA.
for first time home buyers, and improving that. And they dropped
I
the
was an FHA.
mortgage insurance rate
First-time home buyer.
from point like by 30 basis points
That is
per
huge.
month, like, or annual, but it lowers the monthly mortgage insurance a lot,
Right. Yeah.
which is massive. So I mean, they're getting that benefit. That's a pure benefit to them. The down payment assistance programs that we're seeing come up more and more. We just mentioned United Wholesale, Equity Prime Mortgage, EPM, one of our partners.
I mean,
They have a
financing.
great one. Yep, Land Home
Every
Financial
company
Services.
has a great down payment.
They have a great one. There's a bunch of them out there. Like communities have them.
Right.
Um,
So communities
those-
have them,
those-
government has them. Those are typically the worst.
Oh, yeah.
Imagine that the government funded down payment assistance programs are
But
way
those
worse
are
than the bank
benefits
funded.
to them.
They are still beneficial in getting into first time home buyer. But I want to push back on something
Yes.
because we talk about this all the time. We are in a massive inventory crunch.
We are.
They have to do something for first time home buyers so that there's more inventory on the market. And I truly believe that what they're doing is they do things to incentivize certain people. So they're incentivizing first time home buyers with better LLPAs, loan level pricing adjustments. on all stuff. But what they're really doing is they slashed MI, right? So MI mortgage insurance on FHA is going to be a lot less.
Right.
The other thing is they disincentivized, is that the word? De-incentivized, disincentivized, making it so that people who are more than likely already in a primary residence who want to put a 20% down payment down are going to look at the interest rate if they have a bad mortgage broker, because we'll get the interest rate low still, but are going to look at the interest rate and they're going to say, this doesn't make sense to move out of this house to go to this house. I have a 3% here on this house. This house, I'm going to have a 7%. I can afford $300,000 less. I'm not going to move. So that means that somebody who's going to sell is less likely to sell to somebody who's already in the home.
Right.
Do you see what I'm doing there? And I understand what you're saying, but you have to do something to stop people from moving who already are in the primary residence because we don't have the inventory. So I'm not saying it's right or that it makes sense. They aren't going to come out and say that's why they did it, but to me, it makes sense that they probably did it so that the people who are already in a home are less likely to move.
But what about the younger home buyers? Does this not work for them? Is this not good for them?
This is good for them.
Okay.
First time home buyers, younger people
Right.
that don't own a home, this is good for them.
It incentivizes lower down payments, things like that. People that haven't prepared for.
And that's a big thing
Which-
and that you did a video on.
Yeah.
Ben, one of those videos Ben did.
Yeah.
You don't need 20% for a down payment. We can get you as low as 0% down payment.
We can.
We can get you, and if you get a realtor who can negotiate seller credits, you might not have to come to the table with anything. Now it's rare. Maybe it's $1,000, $2,000. Like we just closed a loan with one of our clients. They only had to come to the table with $2,200, and they bought. How much was their home?
A
$300,000 home, and they came with $2,200. Can you save $2,200 by a home? A lot of people can save that, right? So
I mean, we had a client before that came to closing with what, like less than 100.
yeah, so you can. There's ways to do it, and I think this is a good piece for the education of all the people out there. Like, hey, first-time homebuyers, now's a good time. Some
Right.
people are scared; they're disincentivized. You're being incentivized with lower mortgage insurance, better FHA, so which creates better FHA payments for FHA. You're being incentivized with down payment assistance programs. Now's a good time to buy. Anyone who's telling you not to buy right now, crazy person. Take advantage of the market because there's a lack of inventory, which means you're going to gain appreciation by buying now. Because when there's less inventory, low supply, high demand, prices go up. So over the next few years, you will get, and especially here in the Carolinas, we're the hottest market in the country.
Right.
You're going to do well.
Yeah.
So to answer your question, if you're a first-time home buyer, this is good for you. And I do believe, like, I'm not. You're very upset about this because I mean you come from a very privileged lifestyle, so you're very upset because of the 20% down payment. I think that you have to do this until builders start building more homes, or else the people who because this is very like socialist of me, but I do believe you have to do something to help people get into homes. And I believe that people should be allowed to build wealth in America. And when we don't have enough housing, you either need to incentivize builders to start building more housing,
Yes.
or you need to do what they're doing, and that's saying people who are already in a home, we're going to disincentivize you, or I don't know what the word is, but make sure that you do.
Yeah.
But what about promoting younger first-time home buyers?
That's our job. We have to
Right.
start doing it.
By
We have to start
educating.
getting this information out there to them.
But educating, because the programs are out there, and that's
The programs are there.
Yeah.
It's not marketed well.
Oh, okay.
Yeah, so the programs are there. Like we need to get let me give you an example. The average first time home buyer is between 33 and 35 years
Yeah.
old. We need that number 25, in my opinion. And that's not for me. That doesn't benefit me. That benefits the person buying that home, and that benefits because you're building wealth through appreciation and the paying down of the principal.
Yeah.
Right? Now, there is still, for landlords out there, don't get too mad because there's still a market for rentals because not everybody's going to be in the same position or want to own a home.
Right.
Like there's life factors there. There's more than enough abundance for everybody.
Yeah.
But one of the things you'll see that we're focusing on in these short videos that we've shot, it's marketed to first-time home buyers and getting rid of some of the myths in the industry, like the 20% down payment myth, or you have to have a 700 credit score, things that isn't true.
So what would you say right now, you guys, what's like the target audience versus what you currently have? Like right now, who do you sell homes to the most between what age versus where you want to go, like versus what you who you want to market to?
So
I mean, we're not necessarily marketing towards age, or I don't want to say
so
that. It's more of making sure that every person out there, and yeah, I mean, it probably is way more likely that someone who's
Ben,
younger,
you have an operations mind.
right?
I market to need.
Yeah.
Does that make sense? I sell to need, and it's not really selling because there's need, so they need this. There is a need for younger people to get into homes.
Right.
So there's two areas that I'm really focused on personally. First-time home buyers.
Mhm.
People, first-time home buyers, plain and simple.
Right.
Younger crowd. The younger crowd. But the one issue I do run into with the younger crowd, like I'm talking 30 or less, they think they know everything, which I did too when I was in my 20s. And then when I got to my 30s, and you could probably vouch for this, you've known me since adolescence. I became more open-minded in my 30s.
Yeah.
But my principles became more ingrained. Does that make sense? I'm willing to listen to more people, but I have certain principles. Like I want to help people. I want to help them build wealth through real estate. I want to do well for my family. I want to raise my kids in church, like that type of thing, right?
Yeah.
But I'm also willing to listen to more people and get more sides of it because I know I don't know everything, and my experience isn't everybody else's experience. So I'm targeting personally two places: the Carolinas, my home, York County. Like I'm really targeting York County, and I'm targeting first-time home buyer, younger generation, because I think that the first step to fixing this country is to make sure primary residence you're paying for and you're paying down principal. And when I say that there's enough abundance, and I don't want the landlords to get mad, there's going to be people in different situations, traveling nurses, things that aren't going to want to buy military, that aren't going to want to buy because they have to change bases, change locations.
Yeah.
Do that. There's still a market for the landlord. The second people I'm talking to, because they're savvy, is the investor, is the person with the rent property, right? And then the third is builders, because guess what's going to happen? We have an inventory issue. The only way to fix the inventory issue is to build more housing.
And the biggest thing holding that back right now, cash flow for builders.
And we can resolve that.
Right. So kind of going into what you're saying too, it kind of segues right into our next topic.
But first, bang that red subscribe button, turn on your notifications, and guess what? Follow us on all of our social media. We're NBI Financial Group on everything, literally everything. Here's the other piece, people. We are NBI Financial Group. We're the premier mortgage broker in the industry. This is the Loan Guys Podcast. The Loan Guys Podcast is doing a giveaway sponsored by NBI Financial Group. We will give you $1,000, whether it's $1,000 worth of Bitcoin or $1,000 in cash. All you have to do is be subscribed to our YouTube channel, turn on the notifications. Once you have done that, leave a comment on our video. And don't just leave some comment like great video. Leave a comment discussing the actual video. And after the comment, what I need you to do is leave your Instagram handle. If you leave a meaningful comment with your Instagram handle, you will be entered into a drawing for $1,000, which we're giving away on September 1st. The more meaningful comments you leave with your Instagram handle, the more entries you will have. $1,000 September 1st. Go ahead, do it. Bang the red subscribe button, turn on notifications, comment, Instagram handle, boom, done. You have an opportunity to win $1,000. All right, Ben, what's the next topic?
So, I mean, just the current state of the market, we keep talking about the shortage. So active inventory in housing as of April 17th fell to 5,383, which is all-time low in 2023. How, as like, and I'm speaking to our realtor partners and everyone like that, how do you navigate that right now? I mean, because we're still seeing, even with interest rates like they are being high at least compared to like the last 10 years. How do you compete? How do you take advantage of this market with that shortage? I mean, we're still seeing listings out there where there's 20 plus. I mean, we have one that there's 20 bids, 20 plus offers on the property. Like it's,
if you're in the $250,000 to $500,000 range,
right?
If you're in that range, there's going to be multiple offers. So what needs to happen is the realtor needs to work with their mortgage person, and hopefully it's NBI Financial Group because we are the premier mortgage broker in the Carolinas.
Right.
And they need to have a discussion, and then they need to actually take the advice, listen to what we're saying, and then apply that to their sales technique. Also, the other piece is if your lending partner isn't helping you strategize
Right.
and build business as a realtor, you need to find a
Right.
new lending partner. That's one of the things that we do for our realtors is we're helping you win.
Right.
Why am I helping you win? Because I want my clients to win.
Absolutely.
Because all I do is win. Money. Oh man, do you know in college that song came up? We were playing at Coastal Carolina, and the next pitch I threw against Coastal the year they won the national championship went about 700 feet. The guy hit a home run off me. That was his walk-up song.
It's still not landed.
Every time no, it has. It's been confirmed. It's in orbit around the world. But yeah, every time I hear that song, I'm like, damn, I gave a home run. Oh man, but yeah, they essentially
wasn't that guy like a top 10 draft pick or something?
Second round draft pick in Major League, turned it down to run his family's business. So good for him.
Oh wow.
Yeah, I mean, there's a lot. Yeah, but anyways, back to the mortgage stuff, and back to the realtor partners. You need somebody who's helping you win, who's helping you increase sales. You know, one of the things that we're going to be doing for our realtor partners is hosting events, and the events are going to be current state of the market. What can we do to win? We're going to open it up to town halls. Like, there's going to be 200-person events, man. Like, food, 2 drinks. Like, come on, let's talk. Let's sit down. We're in York County, South Carolina is the first one. The second one's going to be Mecklenburg County. Then we're going to hit Charleston. After Charleston, we're going to Wilmington and Fayetteville. We're doing one a month for the next 12 months, and we're going to have 200 realtors at each of them. So to my operations team, get ready because you're about to be busy, because my wife is planning these. And when my wife plans something, they go very well because she is an event planner. That's what I trade. And yeah, so we're about to get real busy. We're about to get real big. We're even going to live broadcast some of these.
I was going to say, yeah, we should.
We're going to live broadcast some of these. This is great content. We are going to be, we said, remember the goals, Donovan, that we did? This was when we first started shooting content.
Yeah.
One of the things was we are going to take over the Carolinas. Where branding is going to be everywhere because NBI Financial Group is what? The premier mortgage broker.
Agree.
We are your premier mortgage broker. So that's what we are. That's what we're going to do. That's what we're going to show people. We have technology that nobody else has. So if you're a realtor, come work with us, right? How's a realtor increase their business? Work with us. We'll help you.
Exactly.
How does a realtor win more contracts? Work with us. We'll help you.
I mean,
we'll help you. But here's the thing is don't work with us and then act like we don't know what we're doing, because we do.
Right.
If you want to increase your business, if you want to get better, work with us.
And I mean, but how do we help? So to me, it comes off first and foremost is educate and take care of our clients. Show them the value, because especially like with more selective clients right now, I mean, there's not much inventory out there. They don't have
value.
Educating by do a total cost analysis, by actually showing our clients in depth what their investment in a home, because first time home buyer, whatever, it's an investment. It's an investment in your future. It's an investment, I mean, financially and personally.
Right.
Because right now that you don't have as much selection. But there are still plenty of incentives out there. And if you don't have a mortgage partner that you're working with who is showing all of those incentives in a detailed manner to your clients, like your clients may lose interest. And the first thing that you can do is have a mortgage partner who together are both working together to show your clients a great experience and the value that home ownership provides. And the way that we do that is called a total cost analysis. We send a video out to all our clients that breaks down in detail each option that our clients have.
Yep, for sure. That's 100% white glove service, right?
There was a quote I read that said, "If you own a home, you'll never be broke again."
That's true.
Yeah.
So do you remember when Craigslist first came out?
I don't remember when it came out, but I know what Craigslist is. Yeah.
So it was probably, well, you were a little bit younger than us, but I was in high school. You might have been in middle school.
Yeah.
And you kept hearing these stories about how this guy bartered his way up and got a Corvette, right?
Right.
Or X amount of money. But he started with a pen and ended up with a Corvette. So
I think you brought this up one time. Go ahead.
So here's what you have to look at from home ownership, right? You can buy a home, you can live there forever and raise your family, and that home will appreciate in value. and you'll be able to sell that home and make money off of it 30 years later for sure. Like throughout the history of the United States, that's what's happened throughout the entire history. Zoom out, folks. The other piece is well, if I'm a first time home buyer or I'm somebody who's living in a certain property and I say, this house is great. I love it. My house, I'm going to use my house that was in Madison Park and in Charlotte.
Yeah.
It was a beautiful house. I loved it. Like it was great for that time period. But then I got married and then I had kids and then it was too small. And then I sold that house.
Yeah.
And then guess what I didn't have to do? I didn't have to take any money out of my bank account for the down payment and I upgraded.
Mm-hmm.
Right?
Right.
Because I gained appreciation over the 5 years I lived there.
Right.
And then guess what happened next? We went to the next house. We had the kid. The kid started getting a bunch of toys and presents, very generous family and friends. Like people would mail us stuff. And he has like 7 bikes. It's crazy. Like I've had to take his bikes away. He gets really attached to stuff. So that was a little wild. But anyways, long story short, the house became too small for us. But it was a nice house, man. My grass was way better at the old house than the new house, by the way.
Mm-hmm.
I just didn't really focus on it. I thought I was going to be there forever. But it was too small. And my wife got pregnant. For our second kid, we needed more room. We wanted to live in certain school districts. So then we did what? We sold that house that was bigger and better than our first house. We sold that one, and then we used that money as a down payment on a bigger house and didn't have to go into our bank account.
Yep.
Right.
So I brought the Craigslist story up because this guy had a pencil and he traded up. It's not the same as housing, but in housing, if you do what you're supposed to do, you trade up.
Yeah.
And then you get into your forever home.
And it's long-term planning.
Yeah, I mean, it is.
It is. I mean, that's the difference. It's
To an
long-term
extent,
planning
yeah.
to an extent, right? But what home ownership really does is it puts you in a better position long-term. Like looking at the first year or two, yeah. I mean, your payments they may be slightly higher than rent payments right now. But guess what happens? Year 3, 4,
It depends.
rate prices increases. Yeah, it always is going to depend. I mean, we're talking long-term, like you can't predict
It does.
everything.
First,
but
it doesn't. Right now, if you bought a home, it does not mean that you would pay less in rent than you would for your home. That's not
right now, no, because rent prices are historic. I'm talking over the last 10, however many years.
right.
Traditionally, owning a home has been slightly higher, and I'm talking like a few $100s higher a month than renting for a comparable home. Year 2, 3, 4, it's going to inverse. And guess what? That rent payment is going to keep going up and up and up. Your mortgage payment, if you have a fixed rate, which vast majority of people do, especially in this market, is going to stay the same for every single year or go down once you refinance.
So you're gaining value.
Right.
When you rent, you never get your money back. When you sell your home, you get your money back. Right.
Right.
So here's the other piece to it. Like we looked up a stat, and this is another video you'll see, Donovan, is in York County, South Carolina, and I'm using York because this is my main area.
Yeah.
I personally do business in. We have people in Raleigh all over the place, but my personal area that I'm pitching to people.
Mhm.
So in York County, South Carolina, if you were to rent today for a single family residence that we'll call it your primary residence because you're not going to rent and then rent it out, right? So your single family residence average rent price is about $1,765, right? In 2 years, it's going to be over 2,000, almost 2,100. Yeah. So year 3 would be almost $2,100, right? So that just at a projected rent increase of 5%, but we have an inventory issue and rents have increased by more than 5% over the past 3 years. They've actually, in some cases, gone up 20%. I don't think that'll happen again, but if it's 10%, it's going to be more than $2,100 in year 3.
Yeah.
Your first year payment on a $350,000 home in York County, South Carolina, which is a single family primary residence, would be about $1,800. So you're right about the same amount of money. It'd be like $1,850 or something like that, based off of interest rates. That's without any buy downs or interest rate buy downs or any credits from the seller, which we typically get those. But if we don't get them, you'd be right at $1,800. In year 3, your payment's going to be $1,800 if you don't refi, if interest rates don't go any lower. But in year 3 of rent, you're going to be at $2,100. Here's the kicker. Over the 3 years, based on CoreLogic data, which CoreLogic is one of the biggest data companies in the world, if you're anybody who's anybody, including the government, they use CoreLogic data to project things out. Based off CoreLogic data, if you were to sell that home that you purchased, because you can't sell a rental property, if you were to sell a home that you were purchasing, you would see an appreciation of about $146,000. Am I saying that right?
Yeah.
I think I'm saying that right. So in 3 years, you could sell that home and based on CoreLogic data for $146,000 more than what you bought it for. In 3 years, if you're
That
renting,
includes equity.
and you wanted to, that includes the equity, the paying down of the principal. So not $146,000 more, but you take $146,000 before realtor fees.
Right.
If you were to rent, you can't sell the home, but if you were going to buy in 3 years, you're looking at paying $100,000 or so more on that $350,000 home by year 3.
I like the way you put that. That makes a lot of sense.
Right.
There is a cost to
Like you
it.
said, if you rent, it'll go up, but it's not going towards anything.
Correct.
But if you own a home and you're paying the mortgage, then it's going towards you essentially. But yeah.
Right, and the payment stays the same if you're in a fixed rate.
Right.
So you never have to worry about the pay. For 30 years, if you lock in a 30-year fixed rate mortgage, you never again have to worry about the interest
God,
rate.
that fixed mortgage. That's the thing.
Right.
And there's other things you can do too.
Oh, I know. But TikTok, they hate the whole 15 versus 30 versus 20.
Why?
I don't know. That's
Do
just the thing.
you have some comments for us?
Well, I'm just saying the last video, but yeah, I got comments, of course. But
You did, yeah. They don't with the 15
yeah.
versus 30.
It's like a very sticky situation for everyone, for sure.
Well, they don't understand
They
that.
don't get it.
Well, how about this? I have a 29-year mortgage.
HUD is allowing mortgage modifications up to 40 years. That would really,
Yeah.
TikTok's acting like that's like you can just go get a 40-year mortgage.
No,
You
that's
can't. But Ben, do we have any more topics?
a modification. I mean, nothing really.
Donovan, you got comments, right?
Yeah, of course, always.
Yeah, let's do that.
Let's flip. 'Cause I'm getting hungry. It's lunchtime.
Okay.
People are probably sick of hearing us, but we just told them a ton of information on how they can make money
We did.
in real estate, how they can up their living situation.
Yeah.
So,
Well, like the biggest thing for TikTok right now is we're getting a lot of comments on you talking about the top 1% paying the paying the taxes, and like I have a comment that says top 10% controls. Can you hear me?
yeah, I mean,
Okay.
I was telling Ben to look it up.
It says top 10% controls 76% of the nation's wealth. The bottom 50% controls 1%.
Mhm.
They pay the most taxes because they have the most money. You agree?
Yeah, I agree.
Mhm.
And to the bottom, 90%.
1%
So the bottom, hold on.
controls.
So the top 10% controls 76% of the money.
Yep.
And the bottom 90% controls what? Or the bottom 50%.
Controls just 1%. So not much of anything, pretty much.
So what percent was it was the bottom 50% you said?
Bottom 50% controls 1%. Yep.
So can I speak to the bottom 50% for a second?
Go ahead.
Get your money up. Get your money up.
Yeah.
Here's the deal. There's a couple of things I got to say about this.
Mhm.
That's a correct statement. They have the most money.
Yeah.
They have more money than the bottom 50%, but they didn't steal the money.
Right.
They worked. They developed their skill sets. They learned how to play the game because that's what it is. Think of Monopoly, and then they put themselves in a better financial position.
Yeah.
Don't be mad at them. Be mad at yourself for not developing skill set. One of the things I tell people all the time: should I go to college? This question I get all the time. College, your kid's going to go to college. Well, right now we have a severe shortage in the trades.
Yeah.
Plumbers, electricians,
Yes.
welders. You can literally at 24 years old start making $100,000 a year
Oh,
doing
yeah.
a trade. Then learn the business. Then build the business. Then market to other people to come in. And now you're going from $100,000 a year to $500,000 a year.
Yeah.
But if you're $100,000 a year as a 24-year-old, if you save, live off $50,000, which I think most people can live off $50,000 a year, especially in their 20s without families and stuff. Take that $50,000, put it into other investments,
Yeah.
right? Put it into 401k. Put it into that. By the time you're 50, you will be a millionaire.
Right.
If you do that.
I mean, it grows. I mean, and you say that but 39% is owned by the top 1%. Also, by the way,
39%.
of all federally reported assets.
Right.
Is controlled by the top 1%. So then the other, what was that? Another 30% or so by the next 9%. So, but that kind of shows that money grows exponentially. I mean, there's a saying that you have to have money to make money. That's
Yeah.
not exactly true, but it's true to an extent.
It's pretty true.
Well, where it's not true, and that kind of brings into exactly what we can do, like what we do and why we do this. Like we have clients that recorded on a home today. I'm not gonna, but they're in
We
their
should get into that story.
but they're in their very early 20s, buying their first home as a primary residence. what they're planning on doing is living there for a couple of years, fix the work on the property.
They're house hacking.
Right. And then at that point, they're going to buy another one and look to rent the one.
Let me tell you how they're house hacking. I think this is great. So the client, right? And this is a house hack. This will be perfect for TikTok. They love house hacking.
Yeah.
So what this client is doing, they're in the military. They just got married, 21 and 22 years old.
Right.
They called me and they said, Nick, what can we do? We want to build wealth through real estate. I don't even know how they got it. Oh, I do. Paris Capers, if you're a realtor over in the Fayetteville area, Paris Cape, or not a realtor, if you're a client looking for a home in the Fayetteville area, go to Paris Capers. He referred this client to me. We started talking. I'll never forget. They called me on a Sunday. They were getting married 4 days later. They wanted to buy a house. They wanted to get closed. They wanted to build wealth through real estate. They're in the military. Because they're in the military, they qualify for a VA loan.
Yeah.
Up to 100% financing means $0 down payment. I talked to Paris. They didn't have a ton of money. They had some money, but not a ton of money. So they asked, what can we do about closing costs? Because closing costs are typically between $5,000 and $8,000. Okay, we need a seller credit. Got the seller credit to cover closing costs. They're closing out pretty much any money out of the pocket, right?
Yeah.
Very minimal amount of money out of the pocket. They're going to live there for the next 12 months. And then what they're going to do is they're then going to rent that property out, get a lease agreement on it, get the first month's rent and a security deposit, show that to us so that we don't have to count that monthly payment against them. And then they're going to find a different primary residence that they're going to move into, and they're going to live there. They, at 23 or 24 years old, if they follow the plan that we put together, they will now have a rental property and they'll have a primary residence. And the rental property, the best part about that is, guess what? It's in a military base area. So military comes there. The military gives. Oh yeah, this is the other piece.
Yeah.
The military gives them a stipend for housing.
Yeah.
So their housing payment, they want it to be X amount of dollars. We'll call it, even number 1,700. So their payment is exactly what the stipend is. So they're not actually coming out of any pocket. They are not coming out of pocket to make the payment.
$40 a month.
They have to pay $40 a month extra
because they had to have wind and because they're near the coast. So their insurance was double what it traditionally would be. And
so they're paying $40 a month to live in this house. And then they're going to move, and the person who moves in, the military is going to pay the rent on the house. So this house is going to continue to gain appreciation in this area, and the principal is going to continue to be paid down. And in a year from now, they'll be in another one, and they'll live there probably for a year or two, and then they'll go to another one. As long as they're in the military, this is what happens. And if they have to change areas, they can get somebody over there who is maybe manages the property for them, and maybe that'll cost them a little bit of money. But in 30 years, that $300,000 house is going to be worth $600,000.
Yep.
Right.
So that's a house hack. So
have people
and military people. If you have any questions on how to do that, if you're in the Carolinas, at any of the bases down here, or if you're military, National Guardsman, anything like that, come to us, ask us. We will show you how to house hack, build wealth, and maybe you don't have to be a career military person. Maybe you can get out of the military.
Right.
So we love helping our veterans. We work with the biggest lender for veterans, Freedom Mortgage, in the entire country. So,
right. I mean, there's plenty of ways to do things like that. I mean, we did another mortgage very recently for clients who, so it's a younger guy who's in college right now, and he is financing it with his dad as a co-signer on there, buying a primary residence for him. What he's going to do is rent out the 2 rooms.
But it is his primary residence.
It's his primary residence because he is living there for 2 years. Yeah,
I laugh because it's my brother.
I know.
But no, I'm serious. He's living there for the next 2 years. And then guess what's going to happen after that? They have the perfect rental property.
Right.
It's called a kitty condo. And it is, I mean, it's.
What's it called?
It's called a kitty condo.
Is that like a real thing?
Yeah, it is.
Like a kitty cone?
So a lot of people, no, I mean, a lot of people don't allow it. But I mean, we have lender partners that do. But I mean, it is a great idea.
That's an actual name? I did not know that.
Yeah, it is. No, that's an actual thing.
Kitty condo, like Kiddy condo.
Kitty, yeah, I guess because it's like
or Kitty.
I guess it's
Does
for
he
like
doesn't
the
have
child
kids?
who's in. No, but I guess it's for your child who's in school.
That's neat.
Yeah.
But it's like no, but I mean it's because it's specifically made and allowed for that. Like it's not like you're taking advantage. Like FHA
Kitty
has
condo.
it specifically
Makes
for
sense,
that.
yeah.
But it's the perfect way. Like just speaking with a real estate professional who knows this and can kind of point you in these directions to be able to do something for you. I mean, that's a 3.5% down payment. Unless you get seller credits,
I would
even
actually
more.
argue that they need to speak with a mortgage professional on stuff like this, not a real estate professional.
Well, yeah,
The finance
You're
person
right.
is going to know a little bit more about this.
you're right. But
yeah, for sure.
but for sure, but those options are out there. So we're talking like, oh, what can the bottom 50% do? Like there are options to do that, to start building that wealth. And real estate spread out over 30, and and you keep saying, oh, everyone loves the 30 versus 15 year.
Yeah.
Well, what are they going to do? Like the payment on a 15 year, even with a lower interest rate, which it would be, is going to be, but
Double.
yeah, but almost double. Like it's 180% of what it would be for a 30 year.
If you can afford it.
How can you? Right. If you can afford it, okay. But the bottom 50% aren't going to be able to afford that. How can you build wealth? Well, you can do it by buying this asset that's going to give you equity, that's going to put you in a fixed situation, that is going to get you appreciation as well.
Energy. Ben's on it today.
Yeah.
Get him, Ben.
Well, I mean, but that's how you do it. And that's the value that a 30-year provides. Like, so to sit here and say, oh, no, you should only do it, which, I mean, who is that keeps saying, oh, you shouldn't do it unless it's a 15-year?
It's Dave
Ramsey, which is great.
But Dave Ramsey's talking to a different clientele.
Yeah.
Right, exactly. It is, but all I'm saying is that it is a tool there to begin building wealth.
Well,
so when you say you
right.
have to have money to make money, that is not necessarily true, but you need to start because waiting is never going to fix it.
No, face the storm head on. Damn, man.
That was good. Yeah. That was good.
I thought I was looking at myself for a second. What's the next comment out of it?
All right, last comment says, do you think they should like charge the bottom 50% a flat tax rate?
I
guess it's always going to depend.
Flat tax.
Flat tax,
But
yeah.
she said rate, so
A
not
flat tax, yeah, for the most part.
Flat tax, like about 50%. If you make less than X amount of dollars,
Yeah.
there's about 50%, you pay 3% tax or something along those lines, right?
Right.
13% is the number I see talking about a lot. No.
I don't either.
Here's why. So, I don't like the flat tax rate. This they're not gonna like this.
Yeah, I
answer.
know. I can already tell.
I like the fact that if you have a good CPA who knows the tax code, that you can take advantage of the tax code because the government sets the tax code up. It's not loopholes. They set it up to incentivize.
Right.
So what I would say to the bottom 50% is get your money up. If that means, second job for a little while, whatever, like learn a skill,
Work harder, yeah.
figure something out. Like, because if you're not making enough money, you have a problem. You either have a budget problem where you're overspending, or you need to learn a different skill set because the skill set you have is not giving you enough. With that being said, get your money up. Hire a good professional CPA. Don't go on TurboTax and things of that nature. It costs you just as much as if you went to a CPA that's good or close to it. It's never quote unquote free. Even when I was poor, like really broke, it cost me money to file my taxes. Go to a CPA, and I was trying to use TurboTax or whatever it was, but go to a CPA, talk to the CPA, go over ways that you can benefit and save when it comes to your taxes and get a return.
Right.
Because there's tax code that will benefit you. So if you go to a flat tax rate and you take away that tax code, you're actually going to hurt people when it comes to paying taxes. Now, my belief is we do need to pay some taxes, so I'm not going to get too much into that.
Yeah.
I don't want to get too much into that today, but if you have questions about my belief on tax code and tax law and taxes, and if they're too high or they're too low, and fair share versus not fair share, all that, hit us up on our social media and ask the questions. Criticize me. I love it. Man, haters are my motivators. But no, I don't think that they should go to a flat tax rate. I think that there's a reason that we have the tax code to incentivize certain people, certain businesses to do certain things that drive more job creation and wealth and so on and so forth. Ben, what are your thoughts?
Do you feel like credit cards should be used or no?
I don't know.
Okay.
I think credit cards are bad.
Right.
What do you mean credit cards used for what?
Credit card utilization just in general to like maybe, I don't know, make money, save money. I don't know.
What I would recommend is getting 2 credit cards with high credit limits.
I disagree with you. on
Using them extremely limited, meaning a couple $100s a month.
Yeah.
Use it for gas. Use
Yeah.
it just for gas every month. Pay it down to $20, $30
We're
at the end of the month.
different.
Build credit to give you options,
Mhm.
like for home ownership, for a car, for things like that.
I
that-
get what you're saying.
But that's the reason to use
in
them
theory,
in theory. But it's not to actually utilize the credit. It's to build your credit.
Yeah.
here's the problem I have.
What?
3 out of 5 Americans don't have a budget. They aren't disciplined enough to
Yeah.
utilize credit cards in the right way.
Right.
So
Fair.
I would never tell somebody to go out and get a credit card because they're going to see a PS5 that they want in the new Madden game, and they're going to buy it on the credit card, and then they're going to forget to make the payment, and it's actually going to hurt them.
How do you build the credit score though?
You have to be disciplined and have the credit card, right?
Right.
So I think that as time has evolved, we've gotten lazy when it comes to underwriting and qualifying and so on and so forth. There's untraditional methods of credit that we can do if you
There
don't
are.
have a credit score. This is what Dave Ramsey does speak on. I don't agree in personal debt and utilizing personal debt. I do agree in utilizing low interest debt on primary residence or investment properties, things of that nature. And I don't even agree with 100% financing in a lot of situations. There's certain situations I do. I think everything's nuanced. The problem I have with America is we're fat, happy, and lazy right now. And this country has gotten fat, happy, and lazy. And when I say they've gotten lazy, 3 out of 5 Americans don't make a budget. In the 70s, I don't think that was the number. In the 60s, I don't think that was the number. When we had, dad at work, mom home with the kids, I don't think that was the number. And, all the people watching this, fact check me if I'm wrong. Like, hit me with the facts. Like, I like reading the comments, and I respond to pretty much all of them. And I'm still responding to the big video.
Yeah.
There's a lot out there, but my whole thing is, if you can't make a budget, you should not have a credit card, right? So if you don't know exactly how much you're going to spend on gas to utilize your credit to pay off it, because you need to pay that credit card off every month, so that you aren't having to pay interest. What's 23% interest on $1,000? Is it $230?
$1,000.
Probably.
But what I'm getting at is, if you don't pay it off in full every month, you're going to be paying interest on that money. And,
$230. But that's annual, right?
yeah, so divide by 12. So if you have a credit card balance of $1,000 per month,
Yeah.
Or is it annual?
it's not annual.
Mortgages are annual. Let me see.
So, but I'm saying, like, okay, if you don't, I agree with you. But if you don't use the credit card, what can you do to get your credit score to a certain number, or if they want to work on it?
Well, you kind of need it.
Kind of need the credit card.
Yeah. Yeah.
Because installment does not really.
Yeah, installment doesn't do much.
Like
to
if you have a
help credit
car,
score.
it doesn't really help
I was gonna
much.
say that doesn't go to it, or like a phone bill.
No.
So what it really
They're
takes-
starting to allow you to put that stuff on there, but it isn't fully in effect yet.
Yeah.
What it really takes into account is, and again, it's algorithms and things like this, but it really takes into account the fact that you have this ability to use credit and you haven't needed to. So what it looks like, it looks at the amount of credit limit that you have available and how much you actually have at the end of each month in terms of balance. So to build credit, you actually, yes, you do need to have credit cards to get yourself to the upper 700 credit
But
score.
I have to tell everybody, if you're going to get a credit card, you need to have a budget. You need to know exactly
Pace
how much
yourself.
money's coming in,
Oh.
post tax as well, and then you need to pay those credit cards off in full, because it's $230 a month. I'm pretty sure credit cards are not.
Yeah. So right, and that's kind of like what I said. Like, have just one use for it, like gas. So because you do need to use it, but make sure it's something that you aren't going to get carried away with. If you only use it for gas, I mean that's a
But pay it off every single month.
Right.
And not be late on a payment.
Yeah.
So
right. Yeah.
So your
No,
answer
never.
on credit cards is, I would not utilize credit cards unless I was responsible enough to do it. The problem
Right.
in this country, 3 out of 5 people aren't responsible enough to do that. But listen, this has been a great
This is
episode.
a long one.
That was the last comment.
Yep.
Donovan, it's always great to see you. Always great to have you here. Love the fact that you're with us. Ben, I hate you.
Feelings mutual.
But listen, that's it, folks. We appreciate everybody. We appreciate everybody for watching. If you haven't done it yet, bang the red subscribe button, turn on the notifications, and go and follow us. We're the Loan Guys Podcast, but you will find us on NBI Financial Group. Go to NBI Financial Group on every single one of our social medias. That's Twitter, Instagram, Facebook, TikTok, LinkedIn. We're NBI Financial Group on all of it. Literally everything. We're NBI Financial Group on YouTube. We're NBI Financial Group on Rumble. We are NBI Financial Group, your premier mortgage broker. Thank you for watching. Thank you. And don't forget to bang the subscribe button, turn on the notifications, and leave a comment, because we are giving away $1,000, right? So here's how you win the $1,000. Watch our videos on YouTube. Comment on them. You have to be subscribed. Also, turn on the notifications just so you know when the videos go up. Once you are subscribed, you watch the video. All you have to do is leave a comment. Don't just say great video, great thoughts. Give your actual thoughts on something that we're talking about in the video. Show us you watched it, and put in that comment your Instagram handle. Every time you do that on any of our videos, we will enter you into a drawing for $1,000. It's either Bitcoin or cash. It's your choice. And we will do that for you. We will give that to you, and we're giving it away on September 1st. This is going to be huge. We're about to put some advertising dollars away for our giveaway. Please go and do that. But for now, we're out. Peace.